I kind of was on the fence whether to do this on the iPad or the computer, but I think the computer notes are cohesive enough, so I'm just going to kind of talk through it. Hopefully, I'll just kind of say left side or right side, bottom if I'm trying to identify a certain part of what I am showing. So let's talk about taxes for about 15 minutes here. So first of all, three types of taxes: progressive, proportional, and regressive. We have three categories. Progressive is as people's incomes go up, they pay a higher proportion of their income tax. Really, most Western countries follow this model. So this is the United States. As you can see, the higher the more money someone makes, the more they pay in taxes. And it's important to kind of understand the evaluation behind this. So the evaluative piece here is that, well, the general understanding is the person making, let's say, for example, these brackets, the person making $50,000 a year compared to someone making $500,000 a year, the percentage, that you take away from them hurts them more, right? The less money they make. So you want a system that is equitable for everyone. And of course, what is considered equitable? There is some subjectivity, right? But at the same time, if you look at pretty much any, or not any, but most countries, you're not going to see the rich getting taxed 80%, but you're also not going to see the rich getting taxed like 2%, presuming there is tax, or there are some countries without income tax, like Saudi Arabia. Now, this connects to also global issues, right? A little bit glopo here, where you have countries like England, where taxes are pretty high on the rich, and that's why you're starting to see immigration, right? So that's what they eat. People leaving countries like England, France, to places with lower taxes. So I was actually prompted to look at, well, which countries are gaining and losing the most millionaires? And you'll notice taxes are mentioned 4 times here, right? Or 3 times. And then in China's case, there's also capital control. So kind of a lack of how you want to use your money. There's a lack of how much you can have outside of yuan. UK, high taxes. And then you have places like Singapore and the UAE with low taxes that people are going to. The next one I want to talk about is proportional taxes. So this is where there is a specific percentage and people pay that percentage. So for example, in Bulgaria, whether you make $100,000, $200,000, $300,000, you pay 10%. Right? So in some ways, and again, this kind of connects to the evaluative piece, it's fair in the sense that everyone pays the same percentage, but some could say it's unfair in the sense that 10% is a lot for maybe someone who makes $20,000 versus someone who makes $1 million. You take 10%, they're still left with $900,000, right? While someone making $50,000, they lose $5,000, and that could be money spent towards eggs and rent or whatever. Last but not least, regressive tax. Regressive tax is a system of taxation in which tax is levied at a decreasing average rate as income rises. So in other words, the lower income earners are hurt more by the amount of tax. So for example, indirect taxes would be one. So indirect taxes, we've talked about cigarettes, alcohol, oil. So let's say in this fictional world, we'll call this Ecoland, everyone smokes. Everyone smokes a pack of cigarettes. And in this fantasy world, everyone smokes 1 pack exactly, right? No more, no less. Everyone's smoking 1 pack a day. Well, in that case, even though everyone is paying $2, the person who's making $1,000 a day, well, that's only 0.2% of his income or her income. Whereas the person who's making $50 a day, $2 is 4%, right? We're talking about 20 times, proportionally speaking, for the poorer person. And that's a great example of regressive taxes, right? It punishes the poor. Now, from an evaluative perspective of these type of taxes, there are pros and cons, right? The pros is, well, every time the government taxes, cigarettes or oil, et cetera, they're making money. It also discourages the consumption of demerit goods. So, for example, with cigarettes, by adding taxes, hopefully you're going to cut down the quantity of smokers. And finally, the con, and the point I just mentioned earlier, because it is regressive, the poorer people are getting punished. In other words, inequality could could in fact, increase because of such taxes. Now, the government can also redistribute money via transfer payments. So this is when no goods or services are exchanged or rendered, right? So for example, child support, unemployment benefits, Medicaid, Medicare. I looked up the United States, and in fact, the U.S. spends half of their money on such transfer payments like Social Security and Medicare and Medicaid. So overall, we all know that new classical economists would argue against, government having such a big role. And classical economists believe that things like high taxes discourage, right, businesses to invest. It discourages consumers to buy things, and it's bad for overall economic outgrowth. However, but they would also believe that by lowering taxes, you can increase things like SIG-XM. So I thought this was a good connection. One last point is taxes are necessary, but, and there's a huge but, right, is that even though we need taxes, right, to get government revenue, it can do things like drive away millionaires. It can do things like have people be unhappy, right, saying why are, taxes being levied for this industry but not for that industry. So I looked up the United States, right? I wanted to compare what it looked like in regards to tax brackets. I know it says 2025 here, but this is meant to be earlier. But nonetheless, the main message is clear. The main message is this, is that even in a Republican or Democratic system, you'll notice there's real similarities, right? Where essentially the lower, middle income people are getting taxed, 15 to 20 something. The wealthy are getting taxed in the 20s, and then the very rich are getting taxed 37%. So there is great overlap between right wing and left wing. There's great consensus, right, that, well, we shouldn't tax the rich like 70%, and we shouldn't tax the poor like 50%. But with that said, there is that slight difference, right, where those who are kind of more liberal, right, those that kind of have more Keynesian values, they believe in kind of getting more money because they need more money to have Keynesian policies. And then on the right wing, you kind of have more this classical view, right, that if we can cut taxes for these guys, for the rich, well, then they're going to go spend more money, right, is kind of ideology there. Now, let's go through each of the equations that you need to know when it comes to taxes. We'll start with taxable income. So taxable income is probably the easiest of all. Taxable income is just simply what is your income minus tax-free allowance. So for example here, we have this fictional character, we'll call him Engineer Man. Engineer Man makes $48,000. So he's in the second bracket, right? And he gets taxed 20, but it's not that simple. He doesn't just get taxed 20%. The way he gets taxed, that's the next question I'm thinking about. Right now, all we're talking about is taxable income. So taxable income means even though he's in this bracket, you'll notice that first $12,000 is 0% tax. So in other words, that is tax-free allowance. So in order to calculate his taxable income, it's just simply his income, $48,000, minus $12,000, which is the tax-free allowance, and that should give you the answer of $36,000. So that's a very easy one. Now, it gets a little tricky from here. How much does this guy actually pay in income taxes? So what we need to do is work backwards through the bands. So for example, this guy, he's in the second band, but as we established a second ago, the first $12,000 he makes is tax-free. So that means he's only taxed $36,000, 20%. So how do we do that? It's pretty simple. We just simply multiply $36,000 times, that's a typo there, that should be 36, at 20%, and that gives us $7,200. So that is how much this engineer pays in taxes, is $7,200. Now let's do it for a little harder example. So let's do it the CEO here. He makes $165,000. So in this case, we actually have to go through all four bands. The first band, 0%. That first $12K he makes, he doesn't pay any taxes. The second band here, $12K to $50K, that's $38,000. He pays 20% on that. So we just have to simply do 38,000 times 20%, 7,600. But then we keep going, right? Because this guy's all the way in the highest band. The next $100,000 he makes, so 50 to 150, he gets taxed 40%. So in this case, 50 to 150 is 100,000, and then we multiply that by 40%, and he pays 40,000. Finally, the last bit of his money, right? He makes 165,000. So that extra 15,000, or that extra, am I doing that math right? Yeah, the 15,000 that he makes over 150, I multiply times 45. So you can see I'm doing that right here. 15,000 times 45% is 6,500. Finally, at the end here, I just add up all the bands and I get my final number, 5,400. 54,350 is how much he pays in taxes. Now, moving on to the third one, average rate of tax. This is the income tax paid divided by total income. So earlier, we looked at this engineer guy, and if you remember, he makes 48,000, and he pays 7,200 in taxes, which means we actually already have both figures we need to figure out the average rate of tax. So his income paid, which is 7,200, and his total income, which is 48,000. And then I just pop that into a calculator, and I should get 15%. Now, the last one, and this is probably the hardest, is instead of income tax paid and total income, it's change in income tax paid versus change in total income. You might see it as a triangle. This is the marginal rate of tax. So in this scenario, our engineer friend, he's got a raise. He's making $60,000 now. So in order to calculate marginal rate of tax, we so far have 3 out of the 4 digits we have, right? First of all, we know that his original salary was $48,000, and we know his new salary was $60,000. So we're able to know that his change in total income is $12,000. So the first part we have figured out, right? Change in total income is $12,000. Now we have to figure out what is the change in the income tax he pays. So we know originally he used to pay $7,200. Now we basically have to redo the brackets to figure out how much would he pay at $6,000. So when we redo the brackets, what we do is the same thing we've been doing so far, which is the first $12,000 is 0%, so $0. Then the next $38,000 he makes, right? So over here from 12 to 50, he pays 20%, so that's 7,600. But keep in mind, he's got a pay raise, right? He makes more than 50 now, he makes 60. So he is paying in that final bracket that last 10,000, right? That last 10,000 from 50 to 60, he's paying 40%, which comes out to 4,000. So then to figure out how much he pays, I just simply add 7,600 plus 4,000. That is 11,600. So his change in so not the change. So his new income is new income tax is 11,600. So now I know that he used to pay 7,200. Now he pays 11,600. So therefore, he used to pay 7,600, and now he makes 11,600. So all I do is 7,200 to 11,600. What is the change here? Well, that's 4,400. So now I have the change in income tax, which is 4,400. And then the rest is history. I just plug it in the system. Boom, I got 36.67, right? Make sure I round to the hundredth. And that is the answer of marginal rate of tax. So that was it. I think that was the gist of the lecture. And then we went over just that first row of 5,000, each of the progressive, proportional, and regressive. And then also here are the answers for that. Well, that's all from me. Have a good weekend, guys. And next week, we only meet twice. And I think one of the 2 days is a major. So we just get ready for the major, and then we take the major. So hopefully, you guys will have good results there, as it's one of the last times I'm able to evaluate your work before the predicted grades go out. All right, that's all from me. Thanks, guys.